Welcome back. Let's focus on the deal tracker segment and how the deal flow is really developing on all formats like M&A as well as private equity deals, as well as fundraising by companies on the exchanges or the startups. And Grant Thornton has authored a report summing up the deal activity for the month of May, and it has been on the slow lane. Raja Lahiri, who's the partner at Grant Thornton Bharat, joins us with more details on that. Raja, always a pleasure to have you on CNBC TV18. My first question, the prime reasons for the slowdown on the deal street.
Yeah, I think, first of all, afternoon, Nisha, always a pleasure to talk to you. I guess, just to give you some context, it's an 80+% kind of decline in the month of May. Overall, if you look at the first 5 months, it's a very similar 80+% decline in terms of deal value, 45% plus in terms of deal volumes. I think that's the statistics overall. I think very clearly what we are seeing is 2-3 drivers. I think one is the venture capital space has slowed down quite significantly, as we expected, the startup funding and that segment of the market. Secondly, on the private equity side of things, what we are seeing is there are some very interesting large buyout deals that have happened, but overall, there is a sign of caution in terms of writing large checks. That's on the venture capital private equity side. Third, on the M&A side, we are seeing domestic consolidation, but we've not seen the large inbound transactions happening or cross-border activity kind of going through. So I think it's driven by the caution and money supply, and people want to be cautious at this point of time in terms of deal making is concerned.
That's right, and a lot of uncertainty about the economic affairs also globally. But what has been a surprise is the equity market window that has really surprisingly showed up here, with the markets being buoyant despite all the factors lingering in. So what is the difference now on the deal street, Raja, because of this surprise factor? I do hear that a lot of blocks are coming into the market, and a lot of private equity players as well as other investors who wanted to really make that quick buck out of their investments at higher valuations are really coming into the market.
Yeah, no, that's a very interesting trend, because if you have the kind of stock market kind of moving up, it's a good thing, but from a deal-making perspective, it's not a great thing, right? Because you again have that usual conundrum of what valuations you really want to get in from a deal-making perspective. Now, 2-3 trends that I see. One is, if you look at the month of May, 2-3 sectors clearly is driving deals. One is real estate. So commercial real estate is back in a big way. So you've got the GIC Brookfield deal that happened, $1 billion plus. That was the largest deal in the private equity space, a controlled transaction. You also saw Nexus, the Blackstone backed REIT, or again commercial malls, which got significant IPO that was launched and had a very successful run.
Right. Yes.
So real estate has come back. The second, I think the trend we are seeing, and I see that clearly playing out, is the energy transformation, right? So renewable is clearly something that you're going to see a lot of activity, right? We already saw IndiGrid Virescent deal, close to 4,000 crores that got announced in May. You saw KKR also putting a lot of money in a renewable asset. So I think these two sectors, clearly, I would see great traction. But as I said, stock market going up is a good thing in one manner, but not a great thing from a valuation standpoint, because you want investors to also come in at the right price as far as deal making is concerned.
That's right. So the valuation mismatch conundrum really continues, but you made a specific point on REITs and InvITs, and yes, real estate is coming up, but also with interest rate hardening cycle that we had seen so far, though we have a pause now, that really made InvITs and REITs as a much more palatable asset class as well, with the fixed income aspect to it. But one thing, Raja, is definitely the IPO aspirants from the startup space. We've seen some of those announcements come back, and there will be a chance that some of the unicorns will take if the equity markets continue to support. How are you seeing the appetite, the preparedness, as well as whether you see that really coming in as one of the IPO seasons once again?
Yeah, so I would say that I think it's a pretty cautious environment at the moment as far as the IPO market goes. Unicorns, one of the challenges have been on the profitability. I think everybody's working on that profitability focus with significant efforts, I would say. So I think it's not going to come in a hurry, in my view. But having said that, I think unicorns, which are the business models are robust, have showing clear signs of profitability and is able to sustain that. I think there's definitely a clear chance of window. May not be now, but in the next 6 months, some of the assets to watch out for.
All right, Raja, always a pleasure speaking to you. Biggest takeaway, of course, some of the equity market action continues, but deal flow on the slow lane. Thank you so much for joining us, and over to you, Sonal.
Okay, thank you, Nisha, for that interesting discussion.